Good morning, everybody. This is Nick Stern with Robert L. Stern Financial Services. Thank you again for joining me this month. I really appreciate the time. So before I say anything regarding business or the market, I just want to say that I am ecstatic that the winter is finally over. Anyway, for May's discussion, I wanted to provide a bit of a follow-up from April's talk and shed some insight on what's going on in the economy, the stock market, and some of the main risks that we face out there. So let's begin with the economy. Last month we talked about the snowdown. Yes, the snowdown. And the question was the economy actually sluggish because of hard data, or was it weather related? And it appears from the more recent data in March and April that it was in fact a snowdown and weather related. Employment numbers have been much stronger than we expected, and that means more jobs, which means more wages, which means more spending. All very positive indicators for the economy. Private employment is also at an all-time high, and that's another very positive indicator and contributor to the recovering economy. So the takeaway for you is the economy is normalizing. It's becoming healthy again. And it also means that we're not only recovering, but the recovery is actually accelerating. So now let's talk about the stock market. The improvements in the economy haven't exactly equated and translated onto the stock market for 2014. Yes, I'll say we've had a very turbulent month in April, and that appears to be continuing in the very early part of May. The most notable high-flying stocks in sectors, namely biotechnology and technology, have suffered a significant correction. And part of the reason for that correction is the reduction in the quantitative easing program for the Federal Reserve. This has actually bogged down the NASDAQ index, which is comprised a great deal of technology and biotechnology stocks, as well as some of those momentum stocks that I'm sure you've heard about in the media. And it's actually spilled over onto the Dow and the S&P 500 indexes. In addition, you have underwhelming earnings announcements that have also been a driving contributor to some of the more recent volatility. So what does that mean for you? What's happening now? Well, earnings are being moderated, and that's actually causing investors to lose some confidence in the market. And this is actually being illustrated in the bond market, where interest rates are actually lower, which means that investors are putting money or investing money back into bonds at the moment. So again, the takeaway, we don't see any significant cause for alarm in the market at the moment. However, we are keeping a watchful eye and paying close attention to how things are going to pan out. So what are some of the main risks out there? Well, uncertainty remains internationally. And as we talked about last month, the Ukraine situation is the main issue that's going on internationally right now, and that affects more than just Ukraine and Russia. It affects Europe, it can affect us, there can be a little spillover effect. And what we talked about in April's discussion was that the market basically thought that the issue was going to kind of just go away. Well, the reality is it's not, as we had mentioned. And some of the most recent price volatility that you've seen in the market is probably the market pricing some of that uncertainty in. So the takeaway is that if the situation progresses and it gets more severe, it could negatively impact the market and the economy. China is also a concern, but this is a more slow-moving situation, and we don't see an overwhelming risk there at the moment. We're not overly concerned, but we are watching how things are progressing. So the executive summary from today's discussion is the economy is strengthening and the recovery is accelerating, and that's based off employment and the more recent data. The stock market has been turbulent, and that's based off some of the uncertainty internationally, as well as the underwhelming earnings announcements. Regarding the market now and going forward, we don't see any significant risks out there at the moment. And going forward, we don't see any immediate concern, and we see the spring and summer as being relatively positive for the stock market. As always, we do remain cautiously optimistic. Thank you so much for joining me again today. Really appreciate the time. Please feel free to contact us with the email or the number provided at the screen. I look forward to seeing you next month, and I hope you have a great day. Take care.